It's official. If you've been working on your finances to get them better, to get a higher credit score, or save up so you can get that house, well, you are about to be punished by the Biden administration. Take a look. Biden to hike payments for good credit home buyers to subsidize high-risk mortgages. That's right. If you have good credit, you're about to essentially be hit with more fees, and those fees are going to be taken and given to somebody else with a mortgage. You're going to be paying someone else's mortgage. Take a look. Biden rule will redistribute high-risk loan costs to homeowners with good credit. So the fees are going to the people with good credit. Home buyers with good credit to pay higher mortgage rates. An editorial housing proposal would punish those with good credit. And we're hearing now this is going to be happening as of May 1st. That is right. Now, let me know your thoughts in the comments down below. They're saying this is to help close the equity gap, help those that don't have as much money to kind of come up, and it's going to pull those that have money down with some additional fees. Some people are saying this is a good thing. Some people are saying, no, this is not fair. Essentially, people that are working hard to try to save up and to do well for themselves and their family are now being punished for it. And a lot of people are saying this does not make sense. Take a look. Not everybody feels that this is a good thing. Former Obama housing chief slams Biden's unprecedented mortgage plan. This is not the way to do it, they say. So I'm going to give you all the details because they're saying as of May 1st, you can expect these to be implemented. I'll let you know the credit scores, the fees, who's this is going to be impacting, everything involved, and what they're saying about it. Also, Biden said that a lot of programs can expect cuts here very soon from the Republican proposal. And also, if they do not come to an agreement on the debt ceiling negotiation, stick around to the end. I'm going to have an update for you on that as well. Now, if you appreciate the updates, do me a quick favor before we dive in, smash the like button. And also, if you want to stay up to date, it's totally free. Why not? Just hit the subscribe button, turn on the notification bell. I'll let you know everything that's happening with our country, with real estate, Congress, the economy, stimulus, so you know what's going on. And also, shout out to our new members, those of you that hit the join button to get more access, to support the channel and get more direct information right from me. Shout out to you guys. I'm going to make sure that you get all the information you need. And that includes Enrique, Karen, Mary, and Loyal Adams. Congratulations on joining the Ram fam. I'll keep you guys up to date. But with that being said, you guys, let's go ahead and dive right in and get you caught up as people with high credit scores and bigger down payments. Congratulations. You're about to be hit with more fees thanks to the Biden administration. Now, link in the description below to this article that just came out on the 18th, 3 days ago, that says home buyers with good credit scores will soon encounter a costly surprise. A new federal rule that's going to be forcing them to pay higher mortgage rates and fees to subsidize people with riskier credit ratings who are also in the market to buy houses. The fee changes will go into effect on May 1st as a part of the Federal Housing Finance Agency's push for affordable housing, and they will affect mortgages originating at private banks across the country. The federally backed home mortgage companies, Fannie Mae and Freddie Mac, will enact the Loan Level Price Adjustments, or the LLPAs. Mortgage industry specialists say home buyers with credit scores of 680 or higher will pay, for example, about $40 per month more on a loan of $400,000. Home buyers who make down payments of 15 to 20% will get socked with larger fees. So there you have it. If you have a credit score of 680 or higher, you're going to pay more fees, and those fees are going to go to someone else's mortgage. And if you put down 15 to 20%, you're also going to get hit with fees as well. Now, the new fees will apply only to Americans buying houses or refinancing after May 1st. Lenders and real estate agents say the changes will frustrate home buyers with higher credit scores and homeowners seeking to refinance because the rules punishes them for a relatively strong financial position. So they're saying we're doing well, and now we're being punished for doing well with our money. The changes do not make sense. Penalizing borrowers with larger down payments and credit scores that are higher will not go over well, says Ian Wright, a senior loan officer at Bay Equity Home Loans in the San Francisco Bay Area. It overcomplicates things for consumers during a process that can already feel overwhelming with the amount of paperwork, jargon, etc. Confusing the borrower is never a good thing. He said that the rule will cause customer service issues for lenders and individual loan officers when a consumer won't understand why their interest rate and fees suddenly changed. I am all for the first-time home buyers having a chance to get into the market, but it's clear these decisions, They aren't being made by folks that understand the entire mortgage process, Mr. Wright said. The new fees will create extreme confusion as we enter the traditional spring home purchase season, said David Stevens, a former head of Mortgage Bankers Association who served as the commissioner of the Federal Housing Administration during the Obama administration. This confusing approach won't work, and more importantly, couldn't come at a worse time for an industry struggling to get back on its feet after the past 12 months, Mr. Stevens wrote in a recent social media post. To do this at the onset of the spring market is almost offensive to the market, consumers, and lenders. The housing market has been hit by a series of Federal Reserve interest rate hikes that have been driving the mortgage rates up above 6%, roughly double the level from early 2022, and the Fed has raised rates rapidly to bring down inflation, which hit a 4-decade high of 9.1% last summer. Now, in the wake of 3 percentage point increases in mortgage rates, now is not the time to raise the fees on home buyers. Kenny Parcell, the president of the National Association of Realtors, said he told the Federal Housing Finance Agency earlier this year. Under the new mortgage financing rule, home buyers with riskier credit ratings and lower down payments, they're going to qualify for a better mortgage rate and discounted fees. So if you have bad credit and a smaller down payment, that actually might work in your favor. Federal Housing Finance Agency Director Sandra Thompson, a Biden appointee, said the fee changes will increase the pricing support for purchase borrowers' limits by income or by wealth. The agency calls the overall fee changes minimal and said that the move will ensure market stability. So they're saying, listen, it's just a small fee and it's going to help out those that are hurting a lot more than it's going to hurt those that have a lot of money. After a storm of criticism, the agency delayed to August 1st an upfront fee for debt-to-income ratios of 40% or more. The ratio is calculated by dividing the home buyer's monthly debt payments by gross income. It's one of the key measures that lenders use to determine whether a mortgage applicant qualifies for a loan. Ms. Thompson said that the postponement will help to ensure a level playing field for all lenders to have sufficient time to deploy the fees. The fee changes are intended to subsidize higher-risk borrowers by imposing an intentional disruption to traditional risk-based pricing. Now, why was this done? The answer is simple. It was to try to narrow the gap in access to credit, especially for minority home buyers who often have lower down payments and lower credit scores. Now, the gap in home ownership opportunity is real. America is facing a severe shortage of affordable houses for sale, combined with excessive demand that is causing an imbalance. But convoluting prices and credit is not the way to solve the problem. So there you have it. And again, let me know your thoughts in the comments down below. Is this a good decision to do? Are we going to put some fees on those that are doing well as they make these real estate acquisitions and give that to the people that want to buy houses but they are just struggling to get by? Or is this not fair? Are we essentially punishing those that have worked so hard to get good credit scores and to save up that money, and now we're giving that money away and we're saying, congratulations, now we're going to hit you with fees for doing so well? Let me know your thoughts in the comments down below. Now, in addition to that, there are cuts coming to different programs. We have a new proposal that has been released by the Republicans in the House. I'm going to share with you the latest in a video that I just released, so be sure to check that out next. And also, if they do not come to an agreement on something to increase the debt ceiling, we're all going to be having cuts across the board. So I'm going to keep you up to date on that, and I'll keep you up to date on everything that's unfolding. Check out this video next for more information, and I'll see you in the next video. Take care. God bless. This is Steve.